Bill here with the Metals Minute. Today's Friday, October 7th, 2022. Well, we've had the jobs numbers come in and it's a kind of a mixed bag. Probably what we'll hear the most about from the mainstream media is that the unemployment rate is the lowest it's been since 1969. And that's the headline number that will probably catch most of the press. But the other story that we'll hear probably less about is the labor participation rate. In other words, the amount of people working that could be working went lower. So somehow the unemployment numbers are saying that there's very few people unemployed, but the other number shows that a smaller percentage of people are working than have worked in the past. And so this should let everyone know that these numbers are less and less useful because they don't mean what they used to mean. Normally, when the unemployment rate went down, that meant more people were working. But now it doesn't. It just means they're counting fewer people. So it's going to be used as justification. There's a 92% consensus in the market that there will be another 3/4 of a percentage point increase in interest rates, probably in November. That likelihood was 80% before this report that came out this morning. Now it's up to about 92% of those economists polled on Wall Street believe that we'll probably see a 3/4% increase again in interest rates. So that's going to make the stocks, or people are not going to be as willing to invest in the riskiest areas of the market and or of the economy, and that would be stocks. It's also negative for bonds. And as rates continue to rise, that means the rates on mortgages will continue to rise. That will also put pressure on real estate values as that impacts the amount of money that people can borrow to purchase real estate. And so that makes the metals and energy two of the best sectors to watch going forward. And we've seen some of that action this week. Earlier we saw the update on Wednesday, and I anticipate that we'll continue to see an upward trend for the metals. And of course, it's not a straight line, and there are days that we see it taking a breather. But I believe the overall trend, we're in the right place in the precious metals sector. Now, there's some other things going on. We see in OPEC, they have decided to reduce energy production. They want to cut it by 2 million barrels a day. We've also seen actions by the administration to normalize relations with Venezuela for their oil. And the important thing about that is they have a heavy crude, and we need some partner with heavy crude to mix with the light oil that's predominantly what we produce here. And that makes the good mid-grade that can be refined easily. And we need both of those kinds. So we used to have that in Canada, and they've chosen to allow a lot of that to go to China. So we've got to have it from somewhere. And for the first time on OPEC, there's not a friendly partner to the U.S., Great Britain, Germany, and France. Usually there would always be someone that was friendly with one or the other of those Western key nations. That's no longer the case. So we may not have the leverage there. So they may feel like they've got to bite the bullet, so to speak, and try to make up with Venezuela because some of the other choices are not the same as they've always been. So it's interesting. It's going to get interesting. Energy is going to continue to be something to watch, a hot topic. People across Europe, some nations, they're already resorting to burning trash in their homes to keep warm. Even Great Britain is putting out warnings to people that they may have to see 3-hour power cuts at a time, electricity outages for 3 hours at a time this winter. They're telling their folks that's possible. Haven't seen that since the 1970s. We also have seen continued drawdowns of the Strategic Petroleum Reserve here in the United States. And so we're entering this season at a historic low. I mean, we haven't had our SPR this low, especially going into winter, since the early 80s. And so a lot of these things we're seeing, the same things that we're seeing last in that period of time of stagflation, of recession, of higher interest rates, and of much higher gold and silver prices. We're talking about between 5 to 8 times higher over a period of just a few years. And it appears that that is exactly the type of situation that we're entering in now. We'll keep an eye on things. Thank you for tuning in. Have a good weekend. We'll see you soon.